When your income crosses 7 figures, you don't just show up on the IRS radar, you light it up. And under the big beautiful tax bill, the IRS received brand new enforcement funding focused on high wealth taxpayer. So if your adjusted gross income is over $1 million, your odds being audited has quietly multiplied. So don't panic. This video is your audit survival blueprint. In this masterclass style video, I'm going to walk you through 6 major parts. First, what changed under the big beautiful tax bill and why high earners are being flagged more often. 2, what kind of client actually get audited, and one real story of how we help a millionaire doctor avoid penalty. Third, the top smart strategy that millionaires are using in 2025 to stay invisible while playing big. Fourth, how to prepare for 2026 and beyond when enforcement expands. Fifth, the 5 red flags that trigger $1 million audited. 6, and finally, how to turn your record keeping into well-preserving system that build credibility instead of fear. By the end of this video, you will know exactly how to protect yourself, not by hiding money, but by providing compliance before anyone else asks. So, if you are a business owner, an investor, or a professional earning over $1 million a year, stay with me to the end. This section builds on the last one. So let's start with what actually changed. Under the Big Beautiful Tax Bill, or TLB3, Congress expanded deduction and slashed top rates. But those cuts were paid for by something most taxpayers overlook: the billions of dollars of the new IRS enforcement funding. Now, this wasn't random. The IRS rebuilt its high wealth unit, a special division that focuses exclusively on returns like yours, like S corporation, complex partnership, trust, and high-income individual. Here's what's new for 2025. IRS auditors now use AI-powered tools that cross-check every 1099, K1, brokerage statement, and even property record against your tax return. They are not just looking for fraud, they are looking for inconsistency. And the smallest mismatch, like a rounded number, an unclear business purpose, or unsubstantiated deduction, can flag your return for a manual review. The new IRS approach is data-driven and relentless, but that's actually good news, because if you keep your record airtight, you will never be a low-hanging fruit. Why this matter right now? Before we get into strategies, I want to pause for a moment. Why does this matter to you as a millionaire earner in 2025? Because the IRS isn't targeting wealth, it's targeting sloppiness. So that means your best protection isn't secrecy, it's structure. So the next section, I will show you an example of how one client kept their $1 million empire added proof by following just a few simple systems. Let's talk about Dr. Patel, one of our clients from Austin, Texas. He owns several medical practices and an S-corp that managing them. In 2024, his audited gross income were around $1.6 million. In early 2025, he received an IRS letter asking to verify his travel deductions and equipment purchases. Now, most high-income owners would panic, but Dr. Patel didn't, because he had already built his audit defense during the year. Here's exactly what he did. Step 1, he implemented an accountable plan in his S-corp. That means every business expense, mileage, home office use, or supplies had to be documented with a receipt and a written business purpose. Step 2, he used an app to lock all business travel automatically. Each entry shows the date, destination, and client or project tied to the trip. Third, his bookkeeper digitized every receipt into a cloud folder labeled 2024 reimbursement. Fourth, at month end, all receipts are reviewed and only approved expenses were reimbursed. So, when that IRS letter arrived, his team simply exported the mileage report, attached receipt, and submitted the package. 2 weeks later, the case was closed with no changes. The auditor literally said, "We wish more high-income taxpayers kept records like this." That's what audit and visibility looks like, not luck, but preparation. So now you have seen how that works in practice. Let's move into the part that matters the most, what you can do right now to stay invisible while playing big. This next section is your implementation roadmap. If you are multitasking, this is where you want to start taking notes. Let's talk about some strategy to stay audit invisible. Strategy 1, implement an accountable plan. This is not optional at your level. It's how you legally reimburse yourself for business expenses without triggering payroll tax. Here, the step-by-step. 1. Put it in writing. Your plan must list which expenses qualify and how you will submit them. 2. Require documentation. Every claim needs a receipt or log. 3. Reimburse promptly, ideally within 60 days. 4. Return any excess reimbursement. Once it's signed and followed consistently, your audit difference starts to build itself automatically. Strategy number 2, digitize everything. Think of digital record as your insurance policy. Paper gets lost, but PDF don't. Here's how to set it up. You can create a master folder labeled, say, 2025 tax report. Inside, make subfolder for income, deduction, entity, charitable, and real estate. Scan or upload every document into its category and rename it likely like 2025 02/14 for February 15 deduction office furniture PDF. Now when a notice comes, you will respond in minutes, not days. Strategy number 3, match ownership detail across filings. This is the most underrated audit trigger. If your K1 listed Patel Holding LLC, but your Schedule C say Patel Management LLC, the IRS software might think those are unrelated entities. The fix: before you file, cross-check every K1's 1099 and partnership schedule for matching names, EINs, and ownership percentage. If they align perfectly, you pass the AI screening layer and stay invisible. Strategy number 4, you want to document related party transactions. If your S-Corp rent office space from your LLC, there must be a written lease, a market rate term, and consistent payments. Here's how to do it. 1. Rapidly and date it properly. 2. Set a rent amount supported by comparable listing. 3. Pay through a business checking account monthly. 4. Record it as a rent expense on one side and rent income on the other. This prevents the IRS from reclassifying it as a disguised income or a distribution. Strategy 5. Avoid rounded number. Not every deduction ends in 0, but it's scream estimate. So exact number signal accuracy, and accuracy build credibility. Like it's say, 5,000 is a very rounded number, but $5,255 is not. All right, so let's do some midpoint check-in. Let's pause for a moment. So if you have been following along, you have now learned why the IRS is watching high earner more closely, how one client handled an audit flawlessly, and the 5 practical systems that you can apply today. From here, we are shifting gears. So in the next section, we will talk about how to prepare for a post-2026 era and when enforcement will likely get even tougher. Let's talk about part 4, planning for beyond 2026, future-proofing your finances. Here's what you need to understand. After 2026, the temporary tax cut from TLB3 might start to sunset. but enforcement efforts are likely to expand, not shrink. That means the IRS will have more data, more staffing, and more integrated AI system tracking high-wealth taxpayers. So your goal is not to wait for the storm, it's to weatherproof your records. Here's how to future-proof your audit defense. You want to segregate your entities. Each property should have its own legal structure, bank account, and QuickBooks file. Reconcile your books monthly, not once a year. Catch small errors before they snowball. Run a mock audit every December. Your CPA should review your books as if the IRS was coming tomorrow. Use professional appraisal for property, art, or charitable contributions. If your deduction depends on fair market value, document it with an independent valuation. When you do this, you are not just protecting against an audit, you are positioning yourself like a CFO of your own wealth. Now we have looked at future planning, so let's get tactical again. We are heading into the fifth part of this video, so the 5 biggest red flags that trigger audit for million-dollar earners. If you understand these, you can identify and fix them before the IRS even notice. So red flag number 1 is large Schedule C losses on a high income return. If you are earning millions but claiming a 6-figure loss on a side business, the IRS sees that as a hobby risk. So to fix this, keep evidence of your business activities like marketing plan, invoices, business bank account, and your intent to profit. Red flag number 2, claiming real estate professional status without time lock. To qualify, you must work more than 750 hours per year and spend over half of your total working time managing your properties. Keep a contemporaneous log of property name, dates, and tasks. Red flag number 3, large charitable donation without substantiation. Always have written acknowledgement stating no goods or services were provided. And for non-cash donation above $5,000, attach a qualified appraisal and Form 8283. Red flag number 4, inconsistent QBI or pass-through data. Make sure your QBI deduction matches the income on your entity returns. Before filing, reconcile every Schedule K1 against your personal Form 1040. Red flag number 5, unreported foreign account or crypto. If you had more than $10,000 in foreign accounts at any time, you must file the FBAR. If you own digital assets on foreign exchanges, you might also need to check yes on the virtual currency question and report them on Form 8938. When you fix these areas, you remove yourself from 90% of the high web audit pool. We are entering the last stretch now, part 6. And this is the part where we connect everything together. You have built a system, avoided the red flags, and future-proof your finances. Now, let's talk about mindset, the millionaire mindset toward audits. So I want to stress, we want to have the mindset of confidence over fear. So the IRS isn't your enemy. It's simply verifying what you report. The wealthier clients I have worked with all share one trait. They operate with quiet confidence. They don't wait for an audit letter to organize. Their books are clean, their records tell a story. Here's the mindset shift. Audit proofing is not about hiding, it's about building credibility. Every time you document a transaction, attach a receipt, or clarify a business purpose, you are providing that your financial life can stand up to scrutiny. So think of this less as defense and more as brand management for your wealth. You want to be the taxpayer whose name never raised a question. That's the power of preparation. So let's recap quickly. Part 1, you have to learn how to ask your AI to target inconsistency In part 2, you saw how Dr. Patel team turned an audit into a 2-week chain case. Part 3, you implement 5 systems to stay invisible. Part 4, you prepare the post-2026 enforcement wave. You are prepared for it. Part 5, you learn the top 5 audit red flags. And part 6, you build a mindset for a credible, confident, and audit-ready millionaire. That's how the smarter owner play big quietly, strategically, and always ready. Your well-deserved protection, and now you know exactly how to build it. If you like this video, please like, subscribe, and share it with somebody you care. And remember, this is for educational purpose only, not tax or legal advice.